Lights, camera, action. Top trades coming at you here on a hot Tuesday. It's not April Fool's Day any longer. It's April 2nd, but the markets are coming at you heavy, heavy duty with some downside action today. Greg Guenthner, Gunner, good morning. How's everything going?
Good.
All right. Well, we've got, I don't know if you can see it, but on the screen back there, we got some red flashing. So we want to cover that naturally. And we've got a bunch of other things happening. Real quick, if anyone's on the call a little early here, not early, but um, appropriately on time, but we'll give it a minute for the latecomers to come. A little bit of the agenda that we're going to cover today. We got to cover gold. Things are looking good there. We want to cover silver. We want to cover energy. That's going to lead into uranium. We've got some commodities going well. And then me and Gunnar have been talking here in the office this morning. I am very interested in this topic, and I want to dive into it some more if we got some comments on it. It's just some correction talk. Again, I see it in my day-to-day life where I bought a car, probably, again, it was probably the peak of car prices in the history of car prices, but I bought a new car recently. And when I was there, the guy was like kind of saying like it wasn't busy. And now I'm seeing the writing on the wall. Like I think new car sales are falling off the cart, and then all these other things that are happening with high rates. So we're going to cover a little bit of correction stuff. Could we see a correction? Are there any ways to trade it? And we'll get to that a little bit later today. So as always, we're going to be covering investing. So all investing has risk, and anything that we cover on the call today should not be considered personalized investment advice. The comments are open, chat's open, Q&A's open. Gunnar, where would you like to start? Gold, gold, gold?
Yeah, we can talk about gold first. I mean, I wrote about gold this morning in the Morning Reckoning. Obviously, we are seeing these breakouts begin to expand throughout the metal space. It's not just gold now, which is good to see because if you remember, one of the major issues that we've had with the recent gold rally has been the fact that nothing else has really participated. Silver was not outpacing gold like it should in a bullish environment for precious metals. Gold miners have looked terrible until recently. They're just now starting to get up off the mat and run. But what we're seeing now is we're seeing some participation come in. If you look here at gold, we talked about this potential pennant flag, whatever you want to call it, forming after that sharp rally heading into March. We got some quick consolidation, and last week we started coming out above this consolidation and running again. This is a major move right here. This is gold retesting that round number, that $2,000 mark here in mid-February, and then just ripping off of it. And now we're seeing all-time highs every single day. It feels like gold is posting or at least tagging all-time highs and backing off of there, which is great to see because, again, it's something we've been talking about and watching and waiting for forever. If you remember, we can go back here and we can draw this longer line going all the way back to the COVID times of how many times gold looked like it was going to rally up to and break above 2000. We finally are seeing that extension right here. And like I've been saying since way back here in early 2023, once we finally do see this extension above 2000, a substantial extension, not just these quick moves that are retested and then fail back below 2K. But once we see these actual extensions above 2000, then everyone's going to start getting interested very quickly. And that's what's happened over the past few weeks. You can see people jumping into these gold plays that have been dead in the water for years. We look at silver right here. Look at silver. Again, this is a totally different looking chart than gold. You can see how silver is still nowhere near those 2020 highs and still has a lot of work to do. But I do think that once it gets above 26 right here, we're going to see people start jumping on this as well. Silver outpacing gold today. Again, it has not been able to do this over a significant time frame. Yes, we've seen some days where silver has been outperforming gold, but consistently over weeks, over months, no, we have not seen it. This could be the start of something. And again, it feels like people are sneaking back into these trades right now and that the market is doing a little bit of a turn right here. We can tell from the action today that people really don't want to be in tech stocks. They don't want to be in Tesla. I just had a Tesla chart up earlier, if you noticed, before I pulled up the gold chart. They don't want to be in semiconductors at the moment. We'll see if that continues to unwind. But if it does, I think we're going to see all the recent themes that we've been talking about for the past few weeks that have been coming up onto our radar. We're going to see people jumping into the gold miners. We're going to see people jumping into energy stocks. We're going to see people looking for other metals trades, copper, uranium. It feels like commodity super cycle time. The hype is coming back, and everybody's trying to jump back into these plays. I'm excited about it. I'm always excited about market rotation because it gives us a fresh batch of stocks to look at, and I love being early-ish on some of these moves, catching them right when they break out, because that's when you can get those big disbelief rallies, those big momentum moves when not everybody is ready for it, and you get all that really good chasing that helps us sell into strength. So that's what I'm looking at. That's what I'm looking at this morning, and that's what I think is going to be some of the overarching themes as we start the new quarter. It's second quarter. Things are a little bit different now.
Yep. And I'll say this because not everyone on this call, again, this is Top Trades. This is free to everyone, just in case anyone wants to learn what you're doing, Gunnar, what kind of trades you're looking at, some more general stuff. Sometimes we cover the trading desk, what you have going on in your paid publication here as well. And you guys have done very well recently you had your rig trade, which was in the oil space. You've got your GDX trade that you guys closed out today. So again, you're talking the talk today saying, hey, we're seeing some of this rotation, but you were walking the walk in the last few days and weeks with a lot of these trades that have been looking pretty well, looking pretty good out of the gate. So where else do we go from here? I mean, silver's looking up, gold's looking up. Are people getting out of, I mean, it's mainly a rotation trade. Like that's still the thesis.
Well, I mean, I think the rotation can unfold a bunch of different ways, and we have to kind of wait and see how it's going to happen. I think the important thing to realize here is that if we look at the market today, all of the stuff that's been doing really well that everybody's been talking about for the past 5 months isn't doing well. And one day doesn't make a trend. However, this could be the beginning of something a little bit bigger. And like you and I have discussed on these calls, like we've discussed privately before, it feels like everyone has been rocked to sleep by this market. Every time it looked like a stock, like let's just use semiconductor darling, super microcomputer. Every time it looked like this thing was going to crack, buyers came in. Every time it looked like NVIDIA was going to go down, buyers stepped in and have just pushed this thing higher right here. Are these buyers getting tired? We're starting to see a little bit of it this week. And again, I'm not trying to quick call some sort of crash right here or some sort of major downside move. However, this area of the market, semiconductors right here, these big squares, Google, Apple, Microsoft, Meta, what's left of the Magnificent Seven that's still been pushing higher. These trades are looking pretty tired right now, as far as I'm concerned. This is not where I'm looking to put money to work right now, heading into spring, heading into the summer. I think what we're going to see is we're going to see green spots like down here. You see energy still ripping higher right here. We talked about how oil is quietly breaking out. I still don't feel like enough people are talking about this. We have our smiley face on there, man. I know you love these emojis.
Yeah, that's like the one good thing about TradingView. The emojis stay on there. So if you are making a joke to yourself on like a Friday afternoon, you put an emoji on and you wake up on Tuesday for top trades, it's still there.
Yeah. And I mean, look at this move right here. This is we've talked about this at length. I don't want to beat a dead horse right here, but over $80. That was my line in the sand right there. And we retested briefly around the end of March, and it's gone straight up ever since. And we're trending near 85 right here. I think it's kind of a foregone conclusion that oil goes to 90, and we're starting to see XLE really shape up. That's the energy sector right here. I mean, look at this extension. We talked about that breakout at 93 and how it looked like it was ready to go last week, and it certainly has. I mean, you can see how beautiful this looks. You can see the series of higher lows leading up to this big breakout right here. This is something that's been in the making since the start, or at least the middle of the 2022 bear market right there. If you remember back in 2022, for a while there, when all the tech growth was just getting pummeled and crypto was getting destroyed during the first 6 months of 2022, energy actually did really well, and then it rolled over too. It has slowly and choppily recovered, and now it's pushing these highs right here and heading toward 96. It feels like this is going to be one of the spaces to be, and this is where we're going to find some of those hot plays. Like we talked about rig, we had a trade in rig, and this is some of the more speculative stuff in the market. Obviously, this is some of the momentum stuff that I had a trade on in here. But you can see how even the really speculative names, like an offshore driller right here, faked lower and turned around and are pushing higher. So this is the kind of stuff that I'm interested in heading into the spring and the summer months here. I feel like it's going to be a resurgence in the oil names. We're already starting to see those go. The midstream names looked really good. The E&Ps look really good. The miners, I think miners across the board are going to start looking really good. So I'm interested in trying to hop back into things like copper, into uranium. We've talked about that copper chart, right? We've talked about that a couple times.
Yep.
Look at where'd it go?
Gone.
Okay, that's a bummer chart right there. That's not populating for me. We'll go back over here and we'll look at it. I think I had that problem last week. We'll look at it in the old FinViz. Copper's holding above $4 nicely right here. And you can see how copper had been a choppy mess beforehand, and it seems to be turning the corner. Back above $4 is a nice spot. And I really love how, and this is a commodities thing and sometimes a momentum stock thing, where you see these big pushes here and then they overextend a little bit. They shoot over that breakout target, then they come back down and retest it. We've had that $4 retest late last week, and now it's starting to push off of it. To me, that says we're going to see some more of these copper stocks start to run. You can see Southern Copper. This is the biggest name in the group right here. It's kind of pricey and it doesn't have as good an options market as like FCX does, but you can see the breakout in a name like this, and people are rotated into this. Very overbought right here, not a bad thing. But you can see this, you can see FCX. FCX had the initial breakout here above 44, retraced, and is now springboarded off of that above 47. I think this is a strong looking stock here too. It's not a pure play by any stretch of the imagination in copper. A lot of those stocks are really small, but at the same time, great looking charts here, as opposed to, and let's go back to a name like Tesla right here. You know, something is different. Can't quite put my finger on it, but you can see here, this is not a healthy looking chart, and it hasn't been for some time. Peaked out in July of last year and has gone steadily lower ever since. I think new delivery numbers came out. Like we can check the news right here. Worst performer in the Nasdaq 100 so far today, as of 28 minutes ago. I know there was some delivery numbers that weren't good, like new car delivery numbers from Tesla that weren't very good. And you can see here how it's testing the bottom of this recent range. I feel like this earnings report right here, back in January, back at the end of January here, was kind of the catalyst for this last move. You could see how it attempted to close the gap right there and never really managed to get back up into 210s and just rolled back over in March. Not a healthy looking chart. And there's other of the Magnificent Seven or the Fab Four or whatever you want to call them, what's left of them, that aren't looking too good either. You can see Apple continuing to roll over. Very similar look, not exact, but very similar look with Tesla, in that there's a lot of distribution. There's a lot of selling in this name, where it fell off a cliff when it broke 180 right here. We were talking about this in early March, how I thought if it broke 180, we'd be in a little bit of trouble. I didn't want to get short Apple because the market was so strong, and we were still seeing those mega caps go up. And you can see here it attempted to bounce and at least claw back closer to that 180 mark. Didn't quite make it. Got into the 170s or the high 178 range, and now it's rolled over. It's lost 170 again. It's in the high 160s. I mean, I don't want to add too many more lines to this chart, but I think you can clearly see what I'm getting at when I'm talking about, like, okay, you know, it looks like Apple could be running into some additional trouble very soon if it doesn't have some buyers step in here and pick up some shares. Yes, there are some of the mega caps that look a lot better than this, but you can see how there is some selling pressure out there in some of these bigger stocks, and some of these bigger stocks have stopped going up. Yes, we've seen the rally broaden, and we've seen a lot of also rans start to outperform and do pretty well. But at the same time, I don't like to see leaders like Tesla and Apple just consistently underperform. I think this is setting the table for possibly some more downside action. Not a crash, but I do think that since we've had 5 straight months of the market going straight up, right? We've had very few shakeout days in 2024. It's been a very smooth ride higher in the tech names, in the mega caps. They have really pushed this market higher.
Can you pull up like S&P or NASDAQ just to
Yeah.
show that? Because it's true. I mean, you look at the chart, you're like, you can barely see anything. Yeah.
I mean, look at it. I mean, look, these are the October panic lows when it looked like everything was going to fall apart. And then we've been straight up ever since then. Obviously, that was a very powerful move off the lows in November. But even after that, a little bit of a hesitation during New Year's. And yeah, we had a day where we were down what? 1.6%. That's the
Mhm.
ugliest candle I can find in 2024, right there. So an unusually smooth ride higher. Like I said earlier, uh, you know, the market has rocked everyone to sleep. Recency bias is at play here. No one is going to like it when this market starts moving lower. A 5% pullback is going to freak everybody out. And I think it's going to lead to some additional selling and some overshooting to the downside. We've been talking about this for a while. It hasn't materialized yet. I still think it's important to talk about these things and just be prepared for them, because I don't think anybody will be. And they're going to think it's something much worse than it is when stocks start moving lower. Just because of how much smooth sailing we've experienced over the past several months. So we need to be prepared for this. Hopefully, we're in a situation where the rotation trades continue to work and we don't have the market just totally get dumped from every angle, which tends to happen sometimes. Matt, you and I were talking about how gold behaved during the financial crisis. If
Yeah,
we
that's what I'm worried about. And anyone that knows, I was telling Gunnar, is saying I only have so much history in my experience as someone that's felt and seen and traded in different markets with big pullbacks. But in 2008, I remember it like it was yesterday, right? Gold was going up in September, heavy duty, and it's around $1,000. And then all of a sudden, it wasn't just a secular rollover; it was the entire market shit the bed. And then you get to November,
yeah.
gold's at 750 an ounce. Like that was a heavy duty pullback. And that was the bottom for gold. And then it ended up going up towards close to 2000 over the next several years. But that's one of those things where you can get baby with the bathwater, everything gets sold. We're not there yet because hopefully, like you're saying, and this is just something, this is more like edification for you guys at home. If you get into that baby and bathwater, it doesn't, you can have the best research and best thoughts no matter what, but you just get steamrolled because everyone's just selling everything. They're just going to cash because that's the fear trade.
Right. I mean, that was a unique situation. I'm not calling for like a major
Yeah.
crash, financial crisis, but like when you have a situation with gold, gold was doing very well. Gold was in a bull market. And then when an event-driven crisis happened in 2008, the only thing that matters is cash because everyone was forced to sell. And so even a play like gold got trounced, but it was one of the first things to get up and start moving again in 2009. And it did very well, obviously, for the next 2 years, and until it pushed to its apex, which was pretty much the end. That was the blow off top of the commodity supercycle that began in the early aughts. Um, I still think we're in the early innings of a new commodity bull run, and we have not seen it sustained. I think it started in 2019, and it was just interrupted by everything that happened with COVID. Um, because if you go back and look, 2019 was I think gold's secular breakout occurred back here. And this is kind of, this is a little inside baseball right here, but you can see these are the bear market lows for gold around 1050 in December of 2015. And then it kind of completed this bottoming pattern right here when it broke out above 1400 in July of 2019. That's when I really started talking about gold again and saying, okay, I think we've seen a change of character in gold and it's going to start to move higher. And then this is the this is the COVID crash right here. You can see even gold, which was just roaring ahead in early 2020, got dinged because, everything, again, it was an event driven crash. Everything got hit. Cash was king. It was quick, but it definitely, moved back down here, back toward its 2019 lows, its late 2019 lows. And then we had that big trading mania that pushed back up above 2000 for the first time by August of that year. And it's been working on getting above that mark ever since then. I think this is part of a much bigger move, obviously, but now that we're starting to see new highs, folks are really going to start to notice that, yes, there is a new secular bull market in precious metals. It's moving on to base metals, industrial metals. This is going to be, I think, the next hot trade in the markets. This is the spot, again, where I want to be concentrating my attention and trying to find those breakouts like we found in GDX. It's been a long time coming. And again, look at how different GDX looks than gold.
Yeah.
It's been underperforming because no one has wanted anything to do with these stocks. They're just beginning to wake up. Here's Newmont. Look at this longer term chart of Newmont right here. And this is one of the biggest names in the business right here. It's just now starting to wake up. Just now. I think we're in the early innings for these moves right here. And I'm very interested in seeing how the sector starts to spin back into action, because there's a lot of little tiny stuff out there. All these dead miners that have been dead money walking for so many years that are
Yeah.
starting to perk up and move. That's the exciting stuff.
And you can see it in the premium, like a lot of the stuff that you do at the trading desk, you're trading options. I mean, when you look at the premium on some of these gold miners, it is hardly anything. When you compare it to a Tesla or a Clean Spark or a whatever, some of these higher flying momentum stocks in the tech space, huge premium going into trying to buy calls on those. These things, you go out a month or two, pretty close to the money, they are dirt cheap. So if there is a turn here, there's a lot of money to be made because the premium's just not there. They're not expensive calls.
Well, I think that says a lot too about who the speculators are in this market right now. The speculators right now have been playing altcoins, crypto, semiconductors. If you look at where the Wall Street bets crowd, the message board traders are going, they've been playing weekly calls on semiconductors, some of those and just crazy out of the money plays. You know how they do. You know how they roll.
Yeah. You were
That,
giving them a little credit saying weekly. It's more like a day,
right. Sorry. Yeah. I guess a
zero
week is a
day to
very long term trade.
expiration.
Right.
Yeah, exactly.
But
Um,
yeah. But I think. But I think that contributes to the opportunity that we're seeing over here. If we do see the implied volatility ramp up in a lot of these gold plays, they're going to be really good winners for us. So we've traded GDX, and now I think it's time to really drill down and see what's happening below the surface and see what smaller miners are moving. And they're not, it's a very difficult industry to analyze, because you can try to get down to the nitty-gritty and say okay, how's this company going to perform, all this other stuff. I'm much more interested in it from a trading perspective, because I feel like the flow of funds is going to change and people are going to start speculating in them more. That is my thesis. It has nothing to do with I feel like they're going to be pulling more rocks out of the ground than this group, or vice versa. I think if history has taught us anything, a lot of these companies are, financially never in a good position. It's a tough industry. Instead, I want to think about it as in a big rotation, as in we have this big wheel that is the market, and everybody's been over here in this area, and now we're starting to see people start to place their bets on this other side of the wheel right here. And if we have more flows coming into that, the flows are going to rule everything. It's going to become a hot trade. And so that is my thinking. It has nothing to do with fundamental. I know some people are talking about some fundamental stuff
mhm.
in the chat. I'll leave that to other folks. I'm talking more about, which names are breaking out, where's the volume coming from, that sort of line of thinking, because that's how we trade at the trading desk. That's how you're going to succeed as a shorter term trader, is betting on those breakouts and following those moves rather than trying to dig up some obscure, financial or fundamental information on a stock.
Yeah. And the fundamentals, they matter the most when they turn into a narrative that gets more retail investors to buy into something. So that's where a fundamental might matter, because it's like if you hear a story about a certain gold miner and then all your friends or all these other people are hearing it, that's when you can start getting some momentum into some of these things from a retail standpoint. Are there any ETFs, any trades you like in gold, silver, like even the ETFs, like what is like NUGT, like NUGT, that's like a leveraged one, right? Like I'm just trying to think of like
Yeah,
different ways around different spaces that not everyone knows, right?
yeah,
We could play miners, you could play.
there are there are leveraged ETFs. This is a 2x bull.
Yeah, buyer beware. Like we're all well versed. We've got a lot of people that are very smart, good traders in this group. So, but like if you're new to options, you're new to ETFs, you're new to gold, you're looking at rotation, you're excited. Watch out. These ETFs, like if you get a leveraged ETF that's a 2x bull, like these are different beasts altogether.
Right.
So you
And
can
these are and these
return on
use
them.
and these use derivatives too. And so there is going to be, you're not going to want to use these as a long-term buy and hold play.
Yeah.
These are trading vehicles and hedging vehicles, because they do deteriorate over time. So with Nugget, you get a 2x. I would rather just play options on like GDX or something than play one of these. And then the
Yeah.
inverse of that is Dust, I believe.
Yeah.
So this is the bear one. I mean, I just generally stay away from them. I feel like we have better options if we just dig through and we look at some of the, like, okay, so Porcher just put some tickers that we can look at right here.
Yeah, you got the royalty players.
Yeah, here's Wheaton. I think this is a pretty good play. And you can see, like, look, as recently as what? The end of February, nobody wanted these. These are dead money walking, and they're shooting back higher right now. It's gonna be very interesting to see like how some of these trends develop. Even in the royalty plays. What's another one? Franco Nevada, is that one?
Yeah, FNV, Royal Gold, Sandstorm.
Yeah, FNV down today. Again, nobody wanted these plays, and they're starting to perk up a little bit. I'm gonna need to see a little bit, excuse me, I'm gonna need to see a little bit more from them. I'm not trying to bottom pick a lot of these ugly charts, but you can see that they've turned, which is interesting, and it puts them back on the radar. Here's one that's definitely turned
That's
right
a good
here.
looking one.
AEM that someone put in the chat right here. And I mean, again, you don't need to be a master chartist to see the breakout right there. And look at these, look at the powerful moves. You know, look at the gap and goes right here. 3 nice big green candles right here and pulling back a little bit today. I'd say that any type of pause and retracement towards $60 right here, you'll get a nice bounce, and you could see a good buy signal come out of that. Because again, look at this. These just have not done well. Like the more we go back, the uglier and sloppier this chart gets. I feel like we're just now in the beginning, and these started to set up again, which is going to be a lot of fun. You know, again, I'd much rather focus my attention on trying to find good buy points in miners than try to dig through the rubble of whatever's happening in tech on a day like today and try to find some sort of outlier that maybe is going up in a group where gravity is working against it. You know, I do feel like we're in some sort of rotation. We'll have to allow the market to prove me right or wrong, but it does feel like, hey, it's a new quarter. And like we've already discussed, people have made a lot of money, at least on paper, playing a lot of these semiconductors and these tech names here. What else is going on? What's going to be the next hot trade? I think we're looking at it right here.
Yeah. And a lot of these things, who knows, like we'll have to see how it all plays out, but these could just be good old fashioned inflation trades. And that's what the market's picking up on. And they say, hey, get into commodities. What's the best inflation hedge? Gold and oil. Those are the things that are blowing up. So do we want to pivot now? You want to head into energy, take a look at what's happening over there?
Yeah. I mean, like I said, it seems like every day oil is settling higher right here. And I mean, we didn't even get a full pullback to 80 like I thought we might when we were talking last week. Because if you remember last week, we were discussing like how we had to break out above $80 and light crude, is it going to hold it? And WTI didn't even retreat back down and touch 80 again. It's just rocketing higher right now. So this looks great to me. And if we run any type of screen, I was running some screens over the long weekend, and big blocks of energy stocks, you know, starting to come in. And I don't have any specific tickers in front
I'm
of
telling you, we talked about this last time. It's like all my favorite tickers. I need to get my collective stuff together in the oil and gas industry because all the good ones, it's like FANG,
Fang got
PXD.
bought. Didn't Fang get
That's what
bought?
I'm saying. These were all the good tradable stocks. FANG, PXD, all these ones, they're all getting bought out.
Yeah.
The big boys are coming in,
Yeah.
taking
And
all the
like
shares.
you got Uncle Warren and Oxy right here. I mean, you can see like these might need a break because these are getting a little extended. You can see here when you get a candle like this where it's just pushing higher and then it begins to retreat intraday. Right here, you can kind of see where, okay, maybe we're getting a little bit overbought and we need to chill out. Maybe we can throw up
PR looks good. Someone just put that one in. That's Permium Resources.
we,
I mean,
we can
that's
throw up a little RSI. Yeah, so we're getting a little overbought here. I mean, but that's good in the long term, you know. But at the same time, like I think that this is going to be the spot to watch, and I like to see stuff get overbought. Obviously, you know, ExxonMobil. I mean, look at that. Look at the sharp move from 100 right there. I mean, this is up,
that thing.
it's up 20%. off these lows right here. And again, these are the type of moves I really like when you have a situation here where if you talk to somebody on January 18th, they would say, oh, this thing's breaking down. Nope. No, it's not. False breakdown right there. Shook everybody out of this thing and then just rocketed higher. Hasn't slowed down a bit. And now we're looking at a breakout. So from those false moves comes fast moves in the opposite direction. That's certainly what we got. Very interested to see it come out of this because this has been a sloppy mess. For one of the bigger energy names out there, ever since October of 22, it's been a while that it's been in this big range, and it's powered its way up here. Wouldn't be surprised if it hung out a little bit between like 116 and 120 before really taking off again. But the chart looks great. Looks fantastic. What more could you ask for in some of these plays right here? They look amazing. Yeah. And again, if the rotation continues, perfect setup.
It's Exxon, like all these big ones, Chevron, Exxon, Marathon, Valero, Conrad wrote a bunch in, but it's like a lot of them are paying, like these are buy and hold stocks too. They pay a dividend.
Yeah.
Again, I like more of the exciting tradable ones, which I need to do more homework on. Does anyone else have I'm just wondering if they're just all getting bought up. Like if I'm talking, because what I want to talk is US, I want to talk safe US, Canadian, but littler tickers. I just don't have the Rolodex that we used to have because a lot of the good ones, no shock, shouldn't be a shock, getting bought out by the big guys.
Right. These are the
nothing in
there. There's a bunch of international names in here as well. Shell looks pretty good. For a UK play right there, but you can see another breakout right here. And I'm just pulling up, by industry right here. This is just integrated oil and gas that I pulled up, the whole industry. And you can see how these charts are shaping up. Shell looks good. What's another one that's going to look good? CVX looks good. And these are the bigger stocks, obviously, but they're all looking very, very good for setups for shorter term and longer term. That's the best part. That's the best part of this right here. Because we are kind of early-ish in this rotation, in this cycle, it doesn't really matter what your time frame is. If you're looking to buy and hold, I think now is a good time to watch for pullbacks to buy and hold some of these bigger names. If you're looking to position trade and you want to hold something for a few months, I think we're right at that point in the curve where we're going to start to see things ramp up. If you're looking for swing trade timeframes like we did in the trading desk, I think this is a great time to look for, those stocks that are right at breakout points that are about to extend higher. If breakouts are going to work in this environment, then I think it's going to be in energy.
What do you can you pull up EOG? I finally found an old name that I liked that
I remember that
still actually trades. But
yeah.
This one, and again, I'd have to do my homework. I haven't had boots on the ground at this place, right? But back in the day, I would follow all these stocks, and they were just always looking good. So EOG was always well run.
Got earnings in exactly 1 month, so there's that. I wouldn't sweat that too much, but this looks like a big wedge to me. It's it looks like it's been building. And again, a lot of these charts are going to start looking like this in the longer term, where they've just been building to some sort of breakout or breakdown. And with the move off of those lows back in February, it looks like more likely than not, we're going to see a breakout, above this area right here. And again, this is looking back very long term at when this got very messy, because you can see here, this was the beginning of the bear market in 2022, and then these energy names collapsed, and then they tried to rally back. They've been very, very messy, but at the same time, you can see how they're getting cleaner and cleaner, and it's coiling tighter and tighter. It's going to break one way or the other at some point. And it feels
what about someone, it looks like Igor V wrote in SLB. SLB is one of the oil service companies. The other thing is OIH is that ETF still exists, right? OIH is the oil service
OIH
ETF.
Is still there. So you have your big stocks in this group are going to be SLB and Halliburton. Wait, that's not Halliburton. Did Halliburton go bye-bye too? No way.
Yeah, dude, you pick any cool, fun names and they're just going to get chomped up. So but OIH is the ETF that has them all in there too.
That's right. OIH, that's what you were saying. So yeah, the oil services names look good. And again, look at the sharp change in trend that we're seeing in the short term, which I think is going to eventually resolve higher here. I mean, this has been in an uptrend, but a messy uptrend since COVID. Um, but again, these stocks were not high on people's lists uh, late last year, heading into the fourth quarter. They just weren't. And then we're seeing them bottom out now as oil's starting to look more constructive and pushing higher. I think these are good plays. I've noticed that Hal and Schlumberger have been popping up on my radar. They come up on every scan that I run on the weekends because I'm running scans where I'm like, what's posting 20-day highs? What's posting 50-day highs? It's
Yeah.
oil services stuff is popping up, and these energy names keep popping up more and more.
Yeah. And real quick education on that. When we're talking about oil service companies, a company like Exxon, big producer, they're down in, whatever, let's just say Texas. And they're like, hey, we want to, instead of having like 10 drill rigs that, we're drilling in all these different places, let's go up to 12, or let's try and get more out of this. They call Halliburton. And I don't know if Exxon technically works with Halliburton. They work with Halliburton, Schlumberger, all these different ones. But Halliburton, they've got these red trucks and they're like, hey, we want more of those trucks. And Halliburton's like, okay. So they go out, they do all the services on the drill rig, anything they're doing when they're fracking. They're the ones that have the fracking trucks, and they've got all the water and all the fracking fluids and all that stuff. So any increase in production, the oil service companies are they're not even a proxy. They're more of like the marginal. It's kind of like the rig guys as well. Like you get some more rigs out there. You get some more oil service guys. I thought it was funny. Jeff wrote in and said EOG's management is horrible. So see, I'm out of the game. All the good companies got bought. There's only the bottom of the barrel left, but we'll have to figure it out. So maybe the play is more of the service companies as we start cranking up. Like if oil goes to $90, Exxon, Chevron, all the big guys want more. They call up the service companies and they drive some more of their trucks out. They're hiring more people and they make more money.
Well, I think this speaks to also, like I said, where we are in the cycle right here. We're still early, like you said, like all the old tickers are gone, like no one's looked at these in a while. And now we're starting to catch them on our radar. We're starting to look at this group again. So to me, that says, hey, we're still early. We're still way early in this trend. There's still plenty of time to be catching new trades in here. And like I said, we like at the trading desk, we sold our rig calls, we sold our GDX calls, and now it's time to find some new stuff because it's popping off. It's starting to pop off everywhere. We're starting to see these breakouts emerge. We're starting to see some of the stuff that's overextended really consolidate nicely at the top of their ranges, which is what you'd love to see. I hate it. I hate it when we have breakouts. Then we have these big sloppy givebacks where it's like, like it drops 5-10% from its highs, and it gets very messy. Those are tougher to trade. But when you see these stocks that have been doing well, and then it hits your profit targets, you take your gains off the table, and then it just sort of marks time. There's some buyers coming in. There's a lot of buying support for these names, and they're just going to be ready to go again very quickly. Makes for really great trades in and out. Get some good plays down.
Yeah. Do you want to go into uranium a little bit? It's, energy. It's oil adjacent.
Yeah, I mean, I really like the copper charts, and I really like the uranium charts that are forming now. Uranium is a tougher nut to crack, in my opinion, because while those stocks have produced some really good gains, they also give back a lot, and they produce these messy moves. This is the global uranium ETF, URA, and you can see here, we were talking about this all the way back at the start of the year, at the beginning of Q1, because
Hey, look, it's back. Extend that line, dude.
that's
You've
just it.
taken it
This
at the right
line,
time. Like, whoop,
this
there we
line has
go.
been it's been a disaster, and that's why I haven't been like too keen on trying to like hurry myself up and try to jump into a trade like this, because we were in a situation where it looked like we were heading, and we got to kind of pretend like we don't know what's going on here, just to get a better picture of what was going on at the time. So it looked like it was setting up and coiling to break out above 30, and then gapped lower. I don't know what the situation was. It was this was like in that slow week between Christmas and New Year's, but for whatever reason, uranium got sold off hard at the end of the year. And you can see here, like URA, the ETF was down almost 7%, and then pop, you get these huge gaps. Can't trade in these gaps. That's thin air right there. It's just sort of opening up way above where you want to buy. And then ever since that big gap higher right there, where it gapped up 7%, in what was that, middle of January, it's been a sloppy mess. And you can see here how it looked like it was going to extend. And then in February, all of these all of these names fell out of favor again for whatever reason. And now they're curling back around back to that $30 mark. So this thing has been messy. Had a great day yesterday. It looked like it was firming up toward the end of last week, the short trading week, and then yesterday URA popped 4%. CCJ, which is probably the best like shorter term trader in the group, very similar chart. You can see how this one kind of bullies URA. Very similar look with those two peaks right there in January, early February before it dropped. This thing moved big time. It was up almost 8% Monday. I think that's a good sign, and I think it's a good sign that we're getting a tight consolidation right here. But this is
what about our friend? We got UUUU, 4U's. You
quad
keep
U?
typing in U's, but that chart looks like doo-doo.
Yeah, it does.
But then UEC, you type in UEC, we start getting some good lookers.
That looks a lot better. I mean, you can still see it's doing similar. They're all kind of trading together. Like Quad U, that's a smaller one, I believe.
Yeah.
Is it Canadian? Are they all Canadian? I don't know. But this one here, you can still see those two peaks. You don't have a lot of the gaps, which is kind of nice. But yeah, it's building back. This is a smaller one. It's building back towards $7 right there. I feel like if they can consolidate nicely here and then push, like this one will go back up to those highs.
You pull that chart out, and again, this is just now I'm just making up things that look good to justify by. No, I'm saying just pull out, go to like 3 or 4 years.
Oh yeah,
like that chart starts looking like
wild.
Maybe not that far, but yeah, it's like it starts looking a little constructive. Like it had a decent uptrend since 2021. Something
it was a
fell
50
out
cent stock during COVID. So I mean, they're reborn, but at the same time, if we zoom in on something like this is a mess. Very difficult to trade something where you have these big spikes and then it gives it all back. I'd like something that's a little bit better behaved, and maybe it will get back into the type of market where these trend a little cleaner. But I hate to buy something that has a history of like whipsawing people really badly. Maybe it's just because of the sheer size of this thing. It's tiny. I don't know what the market cap is.
Let the record state it's optionable. Not for anyone to play with, but it is optionable. We might be back with some more information on this one. But that chart looks like if you want to guess and say, hey, uranium's going to skyrocket because of XYZ, that's a $6 stock that's optional is pretty decent spot.
It's got a $3 billion market cap, so it's not
it's not nothing
cap or anything. So I mean, it's not the tiniest stock in the world. It was a few years ago, but it's gotten a little bigger. So maybe that'll bring some stability to the market. But at the same time, I think these are interesting plays and worth watching, because if they do sort of start to behave again and start to break out without like causing us too much trouble, then I think we can maybe like time our entries a little bit better. I don't think it's such a great idea to try to buy new highs in uranium recently, just because recent history says that like they tend to give it back and then reset. So maybe like look for these secondary breakouts and see if it can run within the range, and maybe try to take profits on those big extensions higher. You kind of have to adjust, and that's the main thing. Like depending on market conditions and what you're trading, you kind of have to adjust and try different things and try what works. And for this group of stocks, someone's mentioning it in chat right now how it's like, it's a tough one to trade the breakouts. So it can get a little bit hairy. But definitely I think worth watching, just because the momentum is there. If like they can produce these big, 5, 10, 15% moves, why not? There we go. Carl DNN. That's another one. That's another one I forgot. This is a smaller Canadian one, I think. Denison. Nice looking trend. $2 stock. Don't even need options. It's options pricing on a stock. So yeah, they all look kind of similar. They all kind of trade together. If you've been sort of taking mental notes throughout this sector right here. But again, I think there's real potential there. You got to watch trying to grab those highs, because it does tend to smack them back down.
Yeah. And again, the thing that'll throw fuel on this, uranium and fuel, is if you get any sort of global, and again, putting on my Jim Rickards hat saying, talking about the Green New Scam, we did all these green initiatives, solar, wind, everything. Freaking turbines are just breaking. We're throwing them in landfills, all the stuff. That was like the last 20 years. If you start getting a little bit of momentum and people raising their hands saying, we want to build out more nuclear. And note, the Michigan Miracle. I don't know if anyone saw it.
Right. Yeah.
Lake Michigan Miracle, they're starting an old reactor back up. A
Not
new
an April Fool's
reactor.
joke. It's really happening.
Real deal. That's not a building a new one, but they're like, hey, that thing can still work. Turn it on instead of saying go build more windmills and solar and all this stuff. Oh, by the way, did anyone see while I'm trashing green energy? Not that I hate the environment, but I hate things that aren't economic. Did you see the hailstorm in Texas, Gunner? It just
No,
obliterated a solar farm. So
no,
it's
I
like
didn't see that.
these are things you learn over time. It's like you go, oh, solar's great and it's getting more economic and all this stuff. It's like, oh, a hailstorm just took out the whole thing, or whatever. So
Happening.
yeah, you got to watch out for the stuff like that. But yeah, you
Although,
get a narrative on uranium, man. It could start rolling.
I guess if you're in Texas, you invest in what the dent repair people for all the cars that are gonna have the little hail dents in them.
Dude, I was in San Francisco and went up on a roof and we were looking at like solar panels, and it was like they were kind of like, oh, well, let's go look at the solar panels. And then it was just this was San Francisco, and they were like seagulls. And it was just like that was like seagulls bathroom, dude. Like they were just, and it's like, well, if half of the thing is covered up with seagull dookie, like it ain't producing the electricity, dude. All right, enough of that. But a narrative like that, you start getting that a little more mainstream. You maybe
Yeah.
get Donald Trump saying, well, I'm going to bring regular energy back. And then you get over in Europe, maybe they have like a clear thought at one point in time. And they're like, we're going to do something with nuclear too. That kind of narrative can get everything rolling a little bit.
Yeah. Yeah, but for the rest of the day, I think we keep an eye on this rotation. That's the main thing. Is this going to continue? Are we going to see people continue to sell their big tech winners? You can see here, this is the NASDAQ 100, where you can see how it feels like, I mean, we're right back to where we were at the end of February. So March, we really didn't go anywhere. Is this the start of maybe a little bit of a rollover, a little bit of a pullback? Seasonally, it makes sense. I know I've been talking about this for a while, but seasonally, it makes sense for the market to chill out a little bit here, and take us into the summer chop. Maybe that's going to be the situation. And if that's the case, hey, we'll ride some energy, we'll ride some miners. There's going to be good trades out there. It feels like we're setting up for some good trades in other areas of the market. We don't really have to worry about this so much. We just need to be aware of what's happening.
Yeah. And Gunnar, you said it earlier in the green room, and I'll say it again, but it's important. This isn't the time. If the market does get that 5% pullback or a little bit more or whatever, now's not the time to run completely to the other side of the boat,
Right.
because rates are still 5%. They can just cut rates. So this could be one of those things where if you look out 3 months, the market's kind of back where it was. Maybe you got some crappy, like some chop, and then they cut rates and it all balances itself out. But yeah, in the short term, there's definitely some interesting stuff here in the rollover and maybe some downside action. We'll see what happens.
Yeah.
All right, Gunnar, I'll give you the last words. Anything happening here? Because otherwise, we got tons of questions that came in. We'll cover those in chat. We'll cover them next week. We got a bunch of things going on. I think we covered a really good roll of sort of like what could rotate and a lot of tickers in those commodity spaces.
Yeah, I mean, I think that what we're seeing here is normal. I think it's not time to panic. And that's the main thing. Like, there's no reason to panic in this market. Yes, all major drawdowns start with a small correction. That's true. However, we don't really see any evidence of a big crash coming up right now. What I'm seeing instead is a little bit of a rotation. I think a lot of these super hot names need to cool off. And I think it's time, again, to just be looking more toward the commodity resource side of the market. That is where the charts are telling us that the big money is to be made over the next several weeks. So that is going to be that's going to be hogging all my attention. And then maybe if I'm feeling a little extra spicy, then I will attempt to maybe play some downside action in tech if it really sets up and starts to like show that it's going to give us a leg lower.
Yep. All right, everybody. We will be keeping track of what happens in the next coming days. We're seeing a little bit of red in the market, but we'll be back next week on Tuesday with a whole new list of things to look at and top trades. Gunnar, thanks for everything you're doing. You guys are crushing it with RIG, with GDX. You're in the right spot. You're ahead of a lot of the folks out there in this rotation game. So keep up the good work. And thanks everybody for the good comments. We've got a lot of smart people in here. You guys got a lot of good trades. DNN, that looked like the best uranium trade. That didn't come from us. That looked like the best looking chart. So we'll keep an eye on it. And we appreciate you guys tuning in. See you next week.
See you.